Hi, everyone. Thank you for coming to our meeting. Hope everybody is doing well. And today's April meeting is our introduction, and we'll talk about winning the game of capitalism, getting out of the rat race by building assets and pass them over tax-free to your next generation too. And we'll talk about housing markets in 3 different housing areas, and expats traffic and investment opportunities, and owner change properties. Creation of an environment where people can open up their potential, and discovery of Japan's new role in the United States is Nihongo-de-USA's purpose. As of 2023, we provide 2 main services: the creation and management of rental housing for expatriates families from Japan, and asset building assistance through U.S. real estate. We will continue to expand our services throughout the United States and to develop a Japantown. Nihongo-de-USA's one-stop real estate service. There are about 700 expats families coming to the Columbus, Ohio area. Unfortunately, due to the company policies, those Japanese expats families are not allowed to purchase a home during their assignment in the US. They are going to rent a house for 4 to 5 years, but typically in the Midwest, if you have a steady income, you buy a house. So therefore, we haven't had a so to speak, rental market in this area, especially for families who want to send their kids to a good school districts. So therefore, when Japanese expats approach us to look for a rental home, we identified exactly where they want to move into, but not necessarily for these homes. It typically has been a for sale houses. And when they decide on the house that they want to move into, we show that particular home to the potential investor. And the investor decides to buy for the house for the particular expats. We help them purchase the house. At closing or during the transaction of purchase, we prepare a lease agreement between the expat and the investor. And at closing, we had Japanese expats help move into the house. While the expats live in the house, we property manage. And when they move out, we give investor the option to find another tenant or sell or rent again to have the investor continue to purchase, given multiple options how they can finance their homes for the next house. We also help investors seek their exit plan with professional resources. In the end, we created a win-win situation for the Midwest area. As a result, we grew from Columbus, Ohio to other areas. We first went to Huntsville, Alabama area, and expanded to Birmingham area. Also Indiana, in Fort Wayne, West Lafayette, and Indianapolis area. We also expanded to Kentucky, Michigan, California, and Hawaii. And we have a partner realtor now in Central Mexico as well. All right, so it's today's topic, that winning the game of capitalism, getting out of the rat race by building assets and pass them tax-free over to your next generation, number 2. Here is an introduction of me, Akiko Miyamoto. I'm a real estate investor myself and also a founder of Nihongo-de-USA. 2010, I moved from Tokyo to Columbus, Ohio. 2011, I became a licensed Ohio real estate agent. put together a business model of matching rental home needs of the Japanese expats and interest of long-term tenants from investors together. 2012 to now, my husband and I invested in single-family homes to create rental homes for the Japanese expats. There are times that expats are ready to move into homes, but we couldn't always identify a investor clients. At those times, we invested ourselves into real estate. 2012, we bought one in Dublin City School in Powell. 2013, Dublin City School. 2014, 2015, 2016. So these are the homes that we invested. Eventually, when the Japanese companies asked us to help in other areas, we became ourselves the guinea pig for Fort Wayne, Madison, Alabama, and Elizabethtown in Kentucky. We tried something new in Columbus, Ohio, again, 2022. So now we built, I think it's a little bit more, but in last year, $2.1 million in equity, and we have $9,000 in a month of cash flow by 2022. And our financial advisor guaranteed us that we can retire November 2022, 21, 2 Novembers ago. In 2022 to now, just like we did to ourselves, our families, we started to work on building our own assets of the company. So without having a new sales, we'll be able to support our staff members, and that's our goal. So we purchased 2 homes, one in Dublin and one in West Lafayette, Indiana. We continue to buy more houses so that income from the properties will eventually pay for our staff members' salaries. And 2023 right now, we're trying something new for the staff members. They get together to buy one single family home right now. So our offer got accepted. Now we are in contract, and then we just submitted request to remedy today for buying a house in Dublin, Ohio. So where do you invest first? We discussed that you first earn but spend less and save the difference. Because if you try to make more money first, more than you can spend, then you end up spending more because your income goes higher, your life standard goes up. So there will never a catch-up race. So instead, before that your earnings are too big, you start spending less, so therefore there is a surplus, and you save the surplus, and over the time that you build the asset, and the asset start making money, cash flow in the end. And if the monthly cash flow becomes larger than your monthly spending, congratulations, you can retire or you can continue to build your wealth. So that's what we talked about last month. Now, instead of save, I put down payment in the last month's slide, and investment in this growth curve, I put houses. So why real estate? Why not cash? Why not savings? Because over the time, just like now with the inflation, the interest rate is never set higher than inflation rate. If it does, then banks never make money. Well, we just experienced 2 banks in the United States went bankrupt. Why? Because how much they can make in an interest rate in the long term was less than how much they get their money for. So as a result, their balance was collapsed. So therefore, they couldn't stay in business. So it's really not a good thing to save up is a good thing, but in cash doesn't help because of inflation. On the other hand, house value typically goes higher than inflation rate. Two, a stock could become a piece of paper. Once the company goes bankrupt, then that stock value is zero. On the other hand, real estate has never become a piece of paper, so it's a lot lower risk. How about mutual funds, right? Stocks are risky, so therefore you mix different stocks and bonds to make it stronger against risks. But then you have to fund mutual funds 100%, right? On the other hand, if you invest into real estate, you typically put 20% of the value of the home. So therefore, 20% is 1/5 of the value of your investment, right? So even if it's the same risk or growth with mutual funds, by investing into real estate, you can grow your asset 5 times faster, right? Then what are the risks to invest into real estate, right? We talked about the advantages of real estate. What do you really have to risk? Is it that scary to buy a real estate? How about house value could go down? House value has gone down in the past, right? In the last recession, is it really risky for the time the house goes down? How much are you really losing? How much down payment did you put down? So do you entirely lose your investment? Typically, you put down 20%, and then probably closing costs 5,000 to 7,000. That's all you're losing. Even if you decide to lose that, when the price goes down, why do you have to sell it? What if you decide not to sell it? Then you really do not have any risk of losing even the down payment and closing cost, right? How about natural disaster? You typically have homeowners insurance, especially if you buy a house with mortgages, financing. The bank asks you to put homeowners insurance. When the house goes down, homeowners insurance pays you to rebuild the house. Some of the insurance you could even buy to help you for the mortgage payment. It's really up to you what kind of homeowners insurance you want to get. Gary and I once owned a house in Marion, Ohio. A tenant set fire. We didn't know that what's happening because we decided to keep that house big and caught fire, and then first floor got torn down. So therefore, it was such a dangerous house, and the town asked us to demolish the house. And we had a homeowners insurance. They asked us if we want to rebuild the house. Well, it was not really good part of the town. We really didn't enjoy being a landlord in that city. So therefore, we were so happy to see that we get paid by the city to knock down the house to nothing. And also the homeowner's insurance paid us some money to knock down the house. Not only that, paid us some premium. And we used that premium to buy a house in Dublin. That's the down payment for our second house in Dublin, Ohio. And also it became land, and land is sellable. We were able to sell the land as well. So is it really a risk? We never felt that way from such a bad experience also. So here is the worst case scenario. This is the housing sales stats in Columbus, Ohio, 1996 to 2021. Most of us remember we went through a recession. 2005 was the highest of the market. And then Lehman Brothers went out of business, and then stocks crashed. Some of us remember that. So let's look at that, what happened to the housing prices. In 2005, the average sales price of Columbus, Ohio was $177,978. In 2006, it went down to $174,688. And 2007, $172,531. And 2008, $163,732. In 2009, $159,840. And then started to come back in 2010. It went up a little bit, $160,020. That's when I moved from Tokyo to Columbus. And then 2011, it went down a little bit more again, $156,271. And then this was the bottom of the market. 1, 2, 3, 4, 5, 6 years. It was a long recession. And then 2012, it went up to 167,229, 7% growth. This is when I became a realtor in 2011, when I entered into the market. Most of the Japanese expats are renting their homes from homeowners who couldn't sell their homes. And then 2012, when Honda came in to start building new lines, there was heavy lack of housings. And you can see why, because in Columbus area, the housing market bottomed out in 2011 and it just grew so much in 2012. So most of the people who were renting to the Japanese expats sold those houses. And that's why I was able to start the business model, or I had to start the business model of showing the houses on the market. And then when they liked the house, we introduced those homes to the investor to purchase. So that's exactly where I entered, or Nihongo-de-USA entered into the market. So the worst case scenario, if you're all cash buy, the worst time is buying in 2006 and you had to sell in 2011. Of course, if this was an investment property, you had no reason that you needed the cash in 2011. You can hold it, right? And so you bought it for $174,688. How long did you have to wait to break even? 2013, 7 years later, 174,158. So it's about, same price again. But in the worst case scenario, you bought in 2006, and in the worst of the market in 2011, you sold it for 156,271. How much did you really lose? The difference is 18,417, right? The difference is that you lost 10% of the home you purchased. Now it's if you buy 100% cash, but how many of you buy home 100% cash, right? What if you financed? And most of the cases, if it's your own home, you are putting imagine this was your investment property and financed 80% and put down 20%. So 2006, you bought a house for $174,688, put down 20%, that'll be $34,937, right? And then rest is the mortgage. So you have mortgage balance of $139,750. And then you had to, maybe you have your child going to college, you need cash, you decided to sell, take the loss. But even then, you sell it for $156,271. It's still more than how much you owed in the mortgage. It's not even short sale. How bad is that? That's the worst case scenario, right? So I just started to play around the numbers to see, what really happens in other years. So those 6-7 years is the worst time to buy. Worst time to buy right before and sell during that time, right? But what if you bought your house during this recession? Other times it was growing, right? And you can see other than these years, the prices has been going up steadily. Most likely recently, if you bought in a year 2020 to 2021, the median price went up by 23.5%, quite a bit of hike there. So I wanted to show you how much of a risk is it for you to put the money into the real estate. So what happens to the housing value in the any given 10 years? So now I have all the numbers of median house prices since 1996 to 2022 last year. So I played around to see if you owned a property in 10 years, what happened. So I started from 1996, and then you owned for 10 years in 2006. Your buying price is $125,724. By then, your house price has grown to $174,688. That's 38%, 138.95% growth, right? And I did that in each year in 1997, 1998, 1999, 2000, 2001, 2002, 2003. So of course, from year to year, it sounds like the best 10 years would have been 2012 to 2022, that your property value has grown 197%. When's the worst time to own 10 years, right? 2001 to 2011, of course, because 2011 was the lowest of the housing price. So if you own the house, but still you're not losing money. So you bought it for $153,096 and you sell it for $156,271. Yeah, it didn't grow very much, but at the same time, you're not losing it. And what most is that you're not buying this 100% in your own cash. So your cash is not stuck here for the entire 10 years, right? And what if that you diversified and bought a house every other year? There is a good year to okay year to good year to okay year. So that way you can diversify your investment. Also, like I said, you're not putting 100% of your money to buy these houses. So I created another chart. So you bought in each year with down payment of 20%. How did the 20% grow in the next 10 years? 1996, you buy a house of $125,700. 124, 20% of that is $25,144.80. And say you sold it for 2006. So the capital gain was $48,964, right? If you think that $125,724 house of yours grew to $174,688, it's only 138% growth. But how much of your money is in there is only $25,144, right? And that grew to be $48,964. So in truth, the growth is not 138%. That's just the surface housing price, but your money grew 194%, meaning it just basically doubled, right? So there is also a good year to bad year, and you buy it for 2001 and you had to sell in the worst year in 2011. Still, that you put down 30,619, and then the capital gain was 10%, only 10%, but still, if you're putting down 20% to buy an investment property, I hope you had cash flow and rental income from this. So therefore, the worst case scenario, it's really bad. I just wanted to talk about the risks. How risky would it be for you to put $25,000 to even today's market $35,000 into something it can only grow? The only time you lose is down payment and closing cost. And only with that, when you make a decision to sell in that bad year. So what really happened in my 11 years of real estate investment, we want to explore with the real houses, real numbers, and what happened to the tenants and what not, and want to talk about the benefits versus the risks we talked about today. The house value goes up, rent goes up, inflation, strong against inflation. We can use leverage when you first purchase it. At the same time, when your equity grows over the course of the years, you can take a good equity out to buy another house, second house, third house. And we did that. We also refinanced when the interest rate went down to create more cash flow. And it didn't become nothing, even up after a property catches a fire. And also eventually you can pass properties over to your children up to $12.92 million times 2 if you are married. And there is no income to the children on the inheritances. So let's explore those numbers next month. All right, thank you very much. And now on to local housing market. Here is Dublin City School District. Our most current stats are in February. So let's compare with 2022 of last year to this year. The closing sales 64 to 54 by February this year. Everybody talks about low inventory, and it's really low here too. In contract number is less by 12.8% too, but as a result, it's that many people moving into this area because of Intel, because of LG, Honda's EV plant. Therefore, housing price has gone up. Last year, 426,197 to 522,829. Median price 384,950 to 463,975. It's crazy. Average price per square foot went up from 192 to 223. Percentage of original list price received, it's still above 100%. So of all the houses that are on the market, they typically receive multiple offers. I've been with a buyer every week making an offer, and every house we make an offer, multiple offer situation. So on the coast, we hear that some of the market has dropped the prices. That's not the case here in Columbus, Ohio. Days on the market is going up 17 to 39, which is a great news. That means you have a little bit more time to think about which house to buy or time to go look at the houses. New listing is diminished. That's why the price is going up. Median list price, new listing, it's crazy, 447 to 549, 950. And median list price is up to inventory of homes for sale, 64 down to 58. Month supply of inventory, it's about same half month of inventory. Now, Madison, Alabama, do you want to take this over, Mickey?
Sure. I'm not sure if I can explain as good as Akiko, but I'll try. In Madison, we have, compared to last year, the new listing number is from 171 to 123. It's minus 28.1%. And pending sales, last year 148 to this year 134. It's also minus 9.5%. And closed sale, it's about half of the last year. The last year was 148, and this year 86. And days on market unit sale, it's last year was 7, and this year is 47. Just like Columbus situation, we have more time to think about it. And median sales price last year, $349,110, and this year, $386,065. It's still plus 10.6% from last year. And average sales price, $384,838. And this year, $433,882. It's plus 12.7%. And percent of list price received is this year 98.3%, which means minus 3% from last year. This is a little bit different from Columbus situation. And inventory of homes for sale this year 284. So it's, and last year 140. So it's plus 102.9%. And the month supply of inventory is last year 0.8 and this year 2.2. So this is plus 175%.
Thank you, Mickey. This is actually a great news. Looks like in February, Madison market has turned around. So there are more inventories and then more month supply. As a result, percentage of list price received is 98.3%, meaning there are some houses that doesn't receive 100% of original listing price. That means you can ask for a discount, right? And do you remember what I talked about today? The best time to capture is when the price goes down a little bit. 2006 through 2011, look, if you capture houses from 2006 to 2011, look at the growth. It's a lot bigger than when you buy in a steady market, right? When you buy in a steady market and hold for 10 years, it doesn't grow as much. So here is a good sign in Madison. Madison, by the way, is like a Dublin of Columbus. Madison is a good school district of Huntsville. So please remember, if you're always thinking of buying Madison, but because the market was too fast, you couldn't capture a house, now is the time. And even look, even if this is slowing down, still the median price, average price grows 10, 12%, right? So if you hear from Mickey saying, hey, there's an expat family who wants to move into this house, the housing price is 349,110. If the house is showing a positive cash flow, buy it. Because next year, your capital gain is 10%. Plus, you have a cash flow to be able to pay for the repair. There's nothing you're losing. And in the long run, you can see that your growth will be bigger. So that's what it means. That's great, Mickey. Now let's move on to Novi, Michigan. Kenta, would you like to take it over?
Yeah, absolutely. Yeah, so this is the market report for Novi. Above we have the market report for the month of February. And in the bottom, we have the market report for the month of March. If you go over by March, you'll notice new listings have dropped 35.4% from 79 new listings in 2022 to 51 new listings in 2023. Pending sales has also dropped 47.5% from 59 pending sales to 31. And that also translates to a decrease of 54.2% of closed sales from 59 units to 27 units. On days on the market until sale has increased by 160% from 10 days to 26 days. And even with the increased in interest rate, you'll notice the median sale price has increased 1.1%. On the other hand, the average sale price has decreased 10.1% from $545,000 to $490,000. Percent of list price received has decreased 4.7%, just under 100% for the month of March in 2023. And the inventory of homes for sale has decreased 23.9% from 71 units to 54 units. The month supply of inventory has not changed since last year of March. What you'll notice is there's less inventory in the market, so the competition of purchasing a home is a bit lower. So what you'll notice is you might be able to get away with purchasing a house at sale price or a little below sale price at what you'll notice at the percent of list price received, which is at 98.7% March of this year.
Thank you, Kenta. This is great news again. Novi seems like market has turned. Possibly we need to continue to look next month. But, well, if you're looking to buy in Novi, this is where the most Japanese live in Midwest. And then we recently found out a company who used to provide furnished housing for the Japanese expats got out of the market. So they're no longer doing that. So therefore they started to contact us because typically Japanese expats coming into Nova area first move into the furnished townhouse they used to operate. And then while they were staying there, they looked for their permanent house, more permanent houses for their duration of 3 to 5 year job assignment. Now that company got out of the market, probably they took advantage of high market price. maybe it's time for our investors to start having rental homes for the Japanese expats in Novi. Thank you, Kenta. And I think that now Dao from Indiana is joining us. Maybe we will start housing market in Indianapolis area. What do you think, Dao?
Hi, Akiko.
Hi.
Hi. Do you want the housing market information or what are you talking?
Would you like to start the housing market trend like this next month?
Yes, I can.
We can cover Ohio, Indiana, Michigan, and Alabama.
But from what I've seen from you and from I'm not sure what is his name, Kenta.
Kenta.
Yeah. Yeah. So I think it's the market is going to be the same trend. You know. Yeah. Here too. My median price is lower for sure, but right now a lot of investor they buy at the asking price, or they can get a little bit lower and we can negotiate more. So that would be a great news to invest.
Yes, we were looking forward to this time, right? As you can see, any market, you cannot just keep going up. So therefore, if the time comes for, slowdown of the market, now the time to buy. And I am going to talk about my husband, Gary, and my investment experience. And look, we are very lucky to be able to enter into this investment in year 2011, year 2012. So we really fought in the bottom of the market. So the same thing, please learn and take a note. If you enter into investment in a slower down market, it's the time. Of course, you want to really hit the very bottom, right? But just, it's very hard unless you buy one each year and you are lucky to capture one in the lowest year. But just basically, if you're just entering into the time of the slow market, next 10 years of your return is a lot higher. So great news, everyone. Lease listing service, Tenant Plus. This is a new subscription model we started with the landlord. So during the COVID, there was a time there is no international movement of expats coming from Japan or anywhere. So at that time, we had to experience vacancy. And then so we suggested after a couple months that there was no change in the travel, we suggested local investors to why don't we put a local tenant? Because even during the COVID, there were a lot of movements within the country from coast side, more busy cities to move into the Midwest area. So there was a lot of rental home needs in Midwest. So we started to place tenants into the houses that used to take Japanese expats. And then our landlords and investors said, hey, Kiko, it's not fair. You used to put 35 months lease and charged us 1 month rent. But now you never know how long the local tenant is going to live. It's 12 months rent. They might stay longer, but they might leave. And then I have to pay you another 1 month rent to place another tenant. So I said, okay, what can we do? So our team put our heads together. How can we be making into more win-win situation between the landlord and us as property manager? So we decided, how about subscription model that everybody is used to? And this is all-inclusive service from professional photos are on us. We write floor plan to we list your properties on Zillow and MLS and all the other places, and for sales, for lease signs, and we take them to showings, we do background check, everything. And then when we have a tenant, we do not just simply put the key into the hands of the tenant. We show them a manual that we accumulated with 11 years of experience, what needs to be done, how to use each areas of the home. And then we also deliver the moving condition to you owners, and also we keep one. So we have something to compare the move out condition with the moving condition. And then we help you with the renewal of the rent when time comes. And then also we walk through move out time. When they give us a 60-day notice, we come in and inspect the house, because you never know what condition the tenant is living in the house. You want to know in advance that what is on tenant, what is on you, which is normal wear and tear. At the same time, sometimes tenant lives in your house for 5 years. You'll be surprised how outdated the house looks inside. And then put together an estimate what kind of renovation is advised. So therefore you can avoid any kind of vacancy. That's all inclusive. We made it into $100 a month. So whether you have a 12 months tenant or 35 months tenant, it's $100 while tenant is occupying the house. When you only have 12 months tenant, we're only charging you $1,200, even if your rent is $2,500. So we are taking your loss as well. But at the same time, we were able to place a long-term tenant, then you, of course, win, but at the same time, it will be a win-win situation. So we would like to be rewarded as well for that. So that's how we came out to be making a subscription model of the tenant placement. And here is the write-up. And then here is the investment opportunities. We have now type 1 and type 2. Type 1 is the expat families who are looking for a house, but the particular home they're looking for doesn't exist in the inventory rental homes. So therefore we have to find the houses for sale to purchase the house with you, investor, and then we'll have them move in. So this here, a single family home in Alton Darby Elementary School, Memorial Middle School, and Bradley High School. The prices that they are looking for is $330,000 or less, and housing allowance is $2,300. They have 4 years of assignment left, and they need to be able to capture the house by May 31st, or you don't have to move in. Moving in is mid-July because they live in an apartment, but their term is end of July 31st, so they have to give the apartment 60-day notice. So therefore, we want to identify the house by May 31st and then close before mid-July. So if any of you are interested in looking for a house with this particular family, please raise your hand or write to Mickey. We're happy to assist you purchasing, leasing this home with you. We have one family in Dublin looking for a 3-bedroom house. Their rent is $2,300. It can be a townhouse as well. In Washington Courthouse, there are 10 single family homes, 2 to 3 bedrooms for $1,700 to $2,000 by June 2023. If any of you are interested in buying Washington Courthouse, that's where the LG joint venture of LG and Honda put in the battery plant. And so therefore, initial 10 families are moving in there to build the homes. In 2024, 12 Japanese families are moving in, 50 Korean families are moving into the area as well. And by 2024, when the plant opens, Honda and LG plan to hire 2,200 associates there. So as you can see, that housing price ought to go up. And so this area, the property tax is lower than Dublin Hilliard area. So if we want to capture more cash flow, and also median house price is lower here. This is like 40 miles away from the Columbus city. So please let Mickey know that you're interested. Right now, we have 12 families in Dublin area looking for houses. Huntsville, Madison, 8 turning into apartments in February. This has moved in, Mickey. Do you want to take over from here?
Yes, they already decided the apartment, and some of them already moved in, and some of them are moving in this month. And we have 2 families coming to Huntsville, Alabama, and 1 family decided to move into our management property, which investor already bought before in the past. And another family is having showing for the vacant property, which we property manage also. And we asked, I have 3 investors who is interested in purchasing property in this area, and they have started to look for investment properties there.
Great. Yeah, the housing market has turned around, but we receive all the inquiries from Mazda and Toyota experts moving into this area. So we are confident that we'll be able to find a tenant into your house. So right now, let's capture the houses and we'll put the tenant into your house. West Lafayette, any movement?
As I know, I don't think, yes, we have 1 family, but no more movement yet.
West Lafayette is where the Purdue University is. So whether we have expats family or not, we'll be able to place tenants into that area. So we have Dow from Indiana. She will help you buy an investment property, right, Dow? And let's bring some of the houses that possibly can be captured in the area, Dow, maybe. And so we can show the price range of that area who are not familiar with the Indiana area. And then we can show that how low the property tax is. So therefore it is easier to show the returns, cash flows. This is investment opportunity type 2. Some of the owners in Japan who purchased properties 5 years ago, because of the tax system in Japan, they were able to write off 4 years in straight of the property values. So therefore, they're exiting from ownership of the properties. So therefore, we have a list of properties that's looking for a owner's change. Can you still see this screen or I need to reshare?
We can.
Okay, great. You come to Nihongo-de-USA and then you click on the 3rd top and you come to this page, or Mickey can send you a link. And these are the properties that we're looking for next investor. So if any of the houses look good to you, please contact me. You click on the property and it shows the details of the property, and you can see the, I think the pictures were placed, I can't find it right now, but each property has more pictures of the houses as well. HomeBot and client annual review. So we use HomeBot, and I'm sure I see some of you are clicking on the links whenever we send this review for each month. The house price is not exactly at par with the professionally run CMA. However, it gives you an idea of the market. And also you can adjust how much mortgage balance you have, so you have an accurate report of your house. If you ever have any questions from this HomeBot, please feel free to contact us. We're happy to help you. Any questions so far? Okay, if you do not have any questions, our monthly meeting next month is May 2nd, 7 to 8 Eastern Standard Time. Thank you very much for joining us, and we look forward to seeing you next month again. Thank
right.
you.
Thank you.